Hi guys, it's Ian from Educate to Accumulate. It is Wednesday, the 18th of May 2022. It's 1:45 in the afternoon. Firstly, sorry for my absence. I've been tied up on some other projects. Now I seem to be finding enough time to do the analysis and the reports as well as my other commitments. So in this video, I want to talk about the euro against sterling. I've got a setup for buying a dip in this pair, and I want to highlight why I'm coming to that reasoning. So let's get to the charts. As always, we've got 6 time frames here. We've got the monthly chart, got the weekly chart, the daily chart, the 8-hour chart, 4-hour chart, and also the hourly chart. And normally liking to take or wishing to take the trade ideas from the shorter time frames. So what we've got here in the euro sterling setup on the hourly chart is the potential for this symmetrical pattern. So this is a crab formation. We've got an extension from this level. This is the AB level, and that goes up to this 224 extension, 224% extension, 2.24, and that's at 86.20. And then if we take another extension tool from this leg, this is the AX leg, 161.8% is also at 86.20. So pretty tight confluence area to the upside from this pivot point here. And what we're looking for, or what I'm looking for a drive lower towards my bespoke support. I've got 2 levels here. I've got 84.20 and 84.13. I've set a trigger to buy 3 units at the moment at 84.13, but I will monitor the price action if or when it gets closer. Now, what I should say is if it breaks this level here and sort of breaks above the 78.6% level, which is at 85.03, then this analysis is probably void. And it's quite important that we don't jump in before these support levels, because our risk against reward or our R ratio will be skewed. So looking at it from this level, targeting 86.20, let's just put it back a bit, stop below the swing low because that invalidates the trade signal, gives us about 8-1 as far as the risk reward factor is concerned. Now this is actually playing sterling. Now we saw the inflation figures out this morning, consumer price index, and it came in at 9%, and we're expecting a print of 9.1%. Just ridiculous levels for inflation at the moment, and extremely worrying for everybody really. And that resulted in a move to the downside, believe it or not, in sterling. And we saw that impulsive move, and then we saw a turnaround as sterling started to gain strength once more, and we are seeing some pretty choppy price action. If we go back to a higher time frame, and this is the daily chart, and I've highlighted what's happened here because this is basically a mirror of what's happening now on the shorter time frame. So here this was a 78.6% fib level. That was actually our bespoke resistance, literally at the pip at 85.13. I've got here euro resistance too. So on my single currency charts, I've got 2 resistance levels that are virtually laying on top of each other, and that obviously doubles the strength of the signal. And here, if we wanted confirmation, we've got outside bar 6 hour. So sometimes I wait for confirmation of a change of trend, and for me that's an outside candle, so an outside bar candle. And then both currencies in the zone. What does that mean? Well, I already know that euro hit resistance, but sterling also hit support, so sort of a double whammy effect, and then a move to the downside. And that is basically what I'm looking for here. If the euro sterling pair does not get to this level or this zone at 84.20, 84.15, then sterling will not have hit the double resistance level. So I won't be taking taking the trade. So it is essential that we get down to these sort of lower levels, 84.20, 84.13, not just for a risk reward setup, but also for the system setup. If we don't get to those levels, then I doubt sterling would have reached its resistance zone. Okay, guys, I hope that all makes sense. I'll endeavor to post more videos in the days ahead. I will, in the YouTube narrative, leave a link to the Telegram channel. All the analysis trade ideas are free, and you can join and ask questions, etc. Okay, guys, take care. Many thanks.